What's up, everyone? This is Ronald here, and this is going to be an episode for Money Monday. So, I was reading this book here called Angel, and it's about venture capitalism. I don't know if you know what an angel investor is, but I learned about it and it seemed like it was a cool concept. But they're essentially the people that invest in companies before they become huge. They they fund companies when no one else really believes in them. So as I was reading through the book, they talked about how you could become an angel investor at one of the chapters in the book talked about how you could become an angel investor um, without having to give like too much money. Like some of these investors, they give like 500 grand, like $1 million. I don't got that to be putting in a high risk venture, but they talked about some websites where you could invest with less money. It's still, when I say less, maybe like 15 grand, 25 grand, or something in that vicinity. Still a lot. But anyway, so I went to this website called Angel List, and I didn't even get the chance to sift through it too much, but I was like, well, you know what? Let me go and see if they have a YouTube channel. And sure enough, they do. And I figured, let me learn a little bit about this Angel List through some of their videos. And that's what we're going to go ahead and react to. You know, I don't know if you've ever watched the TV show The Wire. They had such hardcore street lingo. The producer of that show literally had a glossary. He had a glossary for the actors so they know what they're saying because there was so much deep street lingo. And when I'm watching some of these investors talk, that's kind of like what it feels like, except it's not. It's still street lingo, but on the corporate streets. So I'm gonna have here ChatGPT on the right hand side to help me figure out what they're talking about when they start throwing around these buzzwords that they're assuming everyone knows. So let's go ahead and check out one of these videos. I saw this one right here. So you raised the fund in 2021. Now what? Angel List Confidential 2023. Let's get into it.
All right, so look, in 2021, 57 billion, that's with a B, $57 billion was raised by venture capitalists alone in that single year. A gazillion new funds were raised, and new gazillions of new emerging managers, and even some of the established funds kind of lost their minds and raised way more capital than the previous vintages. So after getting a little bit high on our own supply, now is a come down period. We're facing a different kind of reality that feels a little bit more harsh, maybe a little bit more bitter. The valuations are lowering, markups are fewer and far between, and frankly, the data to convince LPs to keep supporting emerging managers is getting a little bit weaker.
LPs. I actually heard that term, but I forgot what it meant though. Let me ask chat real quick. What does LP stand for in venture venture cap? Oh, limited partner. That's right. Okay.
But maybe I'm just being a little bit negative here.
Limited partner is just one of the investors.
Joining me to help me dive into that question of what happens next after that bull run are two amazing emerging managers. We have Sarah Smith of Sarah Smith Fund and Rick Salisbury of Cambrian. So before we get going into the questions, you'll notice that we're on a platform that's called Hopin or Ring Central. I'm not sure what it's called now. If you have a question for our panel, please put this in the Q&A section of the Hopin session. We'll try to leave 10-ish minutes of time at the very end to answer your question. So please stick with us all the way through the end. Sarah and Rex, I am so excited to be on this panel with you. And maybe, Sarah, I can start with you. And this is going to be the same question to you both, which is, can we first start by having you each share a bit about who you are, when you raised your fund, and why did you start? So go ahead, Sarah. Why don't you start with that?
Yeah. So I'm Sarah.
Before she starts talking, I was just looking at the summary here of the video. Emerging fund managers raised 57 billion 2021, nearly as much as 2019 and 2020 combined. Okay. And they deployed that capital during the pandemic boom high. What are the right next steps to build a strong track record? And is that possible given current market dynamics? What are the right next steps to build a strong track record? Track record for what? I guess as a venture capitalist? I guess that's going to be the topic for this video, but let's see who this chick is.
Smith. I have a rolling fund called the Sarah Smith Fund. And my fund is focused on tipping the odds in the favor of the CEO to go the distance. So the thesis of my fund is based on some studies that Bain & Company did, where they show that if a founder stays involved in the company in the long term, they're 4 to 5 times more likely to be a top 25% performing company in the public markets. So my whole fund is based on the premise if I can help my founders get that far, then that will provide superior returns to my investors. So I invest at the pre-seed and seed stage, typically 100 to 500K checks. And in return, my founders get access to people ops office hours and a 360 review of the CEO, a lot informed on my time as an operator at Facebook and
Wait, hold up.
for 10 years. And in return, my founders get access to people ops office hours and a 360 review of the CEO, a lot informed on my time as an operator at Facebook and Quora for 10 years.
My founders. Let's put on the caps here. When she said my founders, yeah, I want to say that she's meaning my investors, but the founders are people that actually started a company. And she's talking about them getting access to the CEO. Let's listen to this again.
Prior to founders get access to people ops office hours and a 360 review of the CEO, a lot informed on my time as an operator at Facebook and Quora for 10 years. Prior to this, I had been at Bain Capital for 4 years and had invested as an angel before that as well. And we can talk more maybe later about why we got started, but that's generally my fund. And I focus on marketplaces, fintech, future of work, and dev tools.
Awesome. Thank you so much, Sarah.
Lots of fancy words there. Okay, I can get the last part about the different areas that she focuses on. I still didn't get the purpose of her fund. Her fund. My begging money endeavor. All these fancy words for gathering money. Aw, did I say begging money? That's how the world works, man. People borrow money to get things happening.
And same question to you, Rex. So who are you? When did you raise your fund? Why did you start?
So, and maybe Sarah, first, I'm curious what like levers you like to pull to help keep founders staying the distance. Like, what do you think are the big things?
Yeah, I mean, the key premise is that I've seen firsthand being at Facebook and Quora early
Yeah.
how important the culture is and how much you define your values as a founder, which has to be authentic to you as a founder, because that's how you're going to retain and attract great talent.
Yep.
And it's also how you're going to sell and recruit and fundraise. And so I spend a lot of time with founders thinking through those early building blocks of how to build a foundation,
Yeah.
for them to stay and go the distance with
No,
the company.
I love that idea. We had something we used to say at Intrusion Horus, which was if you don't have like a head of people by the time you reach 30 folks, something will go terribly wrong.
Yes.
But with that, because it doesn't really make sense to have a head of people before that. But until you get that, you should also be building the foundation. So you hire the right head of people. You already have the right like proto processes and shapes. I think it makes a lot of sense. So I'm Rex.
Okay. I think I'm getting like what she. All right. she was basically talking about the importance of founders staying in there to help build the cultures rather than they start the company and then they just quit early. Probably, I think what they refer to as exiting when they cash out, right? And that supposedly that's not good for the culture. That's what I'm gathering so far. Um, so she has a fund that helps founders stay and go the distance. That's the thesis of her fund she was talking about. All right. Like this is all new to me. So maybe there's more to the story. Maybe she sees something that often goes wrong during startups when founders exit early. And she's like, let me try to have a fund where these founders don't exit early. But all right. Anyway, um, I should look it up. Why don't we look it up, right? What did they say her name was? What was her name again? Okay, we're at 410. Hold up, hold up. So you raise the fund. Let's just back up here. See if we can get to the
No, I
thumbnail.
love that idea. We had
Sarah Smith. Oh my goodness, what a popular name. How am I going to look that up? Okay, Sarah Smith, angel investor. Sarah Smith Fund, that's her. Okay, let's see if there's a little bit more clarity here. Managing partner, Sarah Smith Fund. Let's check out our website. It's on Quora. Interesting. I invest early with 100 to 500K checks into extraordinary founder CEOs building companies and marketplaces, fintech, future of work, dev tools, formerly of Bain Capital. Okay, blah, blah, blah. I love tacos. All right. That's not telling me much. Into extraordinary founder CEOs. Like even if I were to ask ChatGPT to explain me what this means, I doubt it could tell me. Let's see. What are some of the ways to improve retention as a startup? All right, this is kind of related to like not quitting again, right? This is what makes learning a long process. You end up like gearing off to these things that you want to make sure you understand. Like I want to know what she does. You know, I don't want to just like skip that. What are some ways to improve retention at a startup? What are your baseline for future? Okay, these are just these topics here. I want to know more specifically about what she does. I guess maybe it's not that important. For what we're trying to do in this video, which is just to hear them talk about the market, right? I think this is the key thing here, that she invests in extraordinary founder CEOs. Okay, let's ask ChatGPT what does this mean? Explain this bio by Sarah Smith. She focuses on early stage investments, typically means she invests in startups that are in their early stages of development, such as seed or Series A. Okay, here's the part that's confusing right here is, okay, she targets investments in companies led by exceptional founder CEOs. This suggests she places a high value on the leadership qualities and vision of their founders. All right, so I guess you just invest money in startups that have great CEOs, or what that she considers great. All right, whatever. Let's hop back.
Very high valuations. And so I found myself at home mainly.
At some point, it's like, when are you leaving to do your own thing? And if you look at the venture ecosystem, 10 years ago was a fraction the size that it is today. But if you look,
Fund does a similar type of thing. I require my LPs to commit to 8 quarters.
a few blocks away from here, I started bringing together founders and people before that. But until you get that, you should also be building the foundation. So you hire the right head of
All right.
people. You already have the right like proto processes and shapes. I think it makes a lot of sense. So I'm Rex. I am solo GP. I run Cambrian Ventures. I am focused on pre-seed and seed investing in fintech. Prior to this, I helped start the investment team at Andreessen Horowitz when we were growing our fintech investment practice. And I spent a whole lot of time across the whole financial services ecosystem as a long time ago an investment banker, then later on as a software engineer, then investing at Andreessen Horowitz and now running my own fund. But how I accidentally ended up in venture is actually through a community. So like 2015, a few blocks away from here, I started bringing together founders and builders in downtown San Francisco to talk about interesting things we're building in fintech. That community grew, now have a Slack community with 1,900 plus fintech founders, have a newsletter, a bunch of other stuff. And that pulled me to investing and advising. And so now I get to do, basically my whole job is investing and advising, but there's a strong kind of community element throughout it.
So I did stalk you on LinkedIn, both of you, very thoroughly. And Bain, A16Z, you clearly were rising leaders in those funds, but yet you still were inspired to strike off on your own. And I think we're all really curious about those kinds of inception stories, like why you wanted to, I think, leave some of those really great, amazing brand funds.
This is him right here on LinkedIn. Let's see here what his bio says. Solo GP at Cambrian, pre-seed and seed fintech partner. Sometimes when I see things like this, it's like these people are gangsters. It's like they just put like buzzwords. It's like you got to be in the game before you can understand what he's talking about. Like he doesn't feel the need to even elaborate in his bio here. Founder and general partner at Cambrian. A little bit more information here. I guess where you can learn a little bit more about them with his newsletter. Investing up to 800,000 at Angel, pre-seed and seed into fintechs and U.S. go-to markets. Okay, I'm starting to get it. So what this guy and that chick Sarah does is, how do I close this? They basically they raise money to invest in startups, and I bet you could just be part of that venture. So that's probably why they're on this podcast to help like promote their business, right? There's a name for this type of business, and I think it's related to being a syndicate, which I just learned about in that book. But okay, so that's making sense because the whole website of Angel List is about how you can invest as an angel, right? So it makes sense that they're going to interview these people that have these funds that you could follow up on and invest if you don't find them directly like on Angel, the website on Angel List, but you could find them here on this YouTube channel. All right, that's making more sense. I had a long night, folks. It's my alarm. Okay, so let's see what else Rex has to say.
To go start your own. Sarah, you want to start with that?
Sure, I'm happy to start. Yeah, Bain is an incredible firm.
Sarah, you want to start with that? Amazing brand funds to go start your own. I think we're all really rising leaders in those very thoroughly.
I missed the question that he asked. I think he's just asking about how did you get started? What made you start your own fund?
And
Basically, my whole job is investing and advising, but there's a strong kind of community element throughout it.
so I did stalk you on LinkedIn, both of you, very thoroughly. And Bain, A16Z, you clearly were rising leaders in those funds, but yet you still were inspired to strike off on your own. And I think we're all really curious about those kinds of inception stories, like why you wanted to, I think, leave some of those really great, amazing brand funds to go start your own. Sarah, you want to start with that?
Sure, I'm happy to start. Yeah, Bain is an incredible firm. I really enjoy my partners there. I was there for 4 years. It was also there during the years of very high valuations, and so I found myself at home mainly at the seed stage. It's also what I had been doing as an investor prior to joining, was mostly seed investing. In the meantime, I also had taken over a program in 2019 running our fund of funds at Bain Capital, and fortunately had a lot of support from the partnership to back over 50 emerging managers. And in doing that, I partnered with a lot of them, and just hearing about their day-to-day and seeing how they were being able to really partner with founders and also be collaborative and frankly have a higher velocity of investments per year. For me, that was a lot more kind of where I feel at home and where I do my best work. So last year, I decided to spin out and start my own fund. Fortunately, with a lot of support from the Bain Capital team, I still collaborate with them very closely, but I really like being able to invest. I roughly invest in 20 companies per year, which is obviously very different than being in a multi-stage fund.
How about yourself, Brad?
So okay, basically she was working for this company Bain, or I guess she was running a fund or working in that world, and then was just like, you know what, I could do this myself and get the big bucks.
Rex?
Yeah, so I get asked this question a lot, and I think it's a little frustrating to get or to hear it posed so often, because I think we have this understanding in the Bay Area that like if you are at a very successful tech company and it grows big and everyone's super happy, you don't get asked like, why did you leave? At some point, it's like, when are you leaving to do your own thing? And if you look at the venture ecosystem, 10 years ago was a fraction the size that it is today. But if you look at the big brand names in venture, they're huge. They have north of 500 employees in some cases, which is great. And they're great firms with great brands who provide great support to their founders. But people should go out and start their own things because that enriches the venture ecosystem. And then for you as a practitioner, like the work is just way more interesting. If you get inside of a large firm, you're going to end up with your Mondays and your Fridays totally blocked off. You're going to have a whole bunch of internal craft in between. You're probably also taking board seats, which is an important role and a great way to support founders, but it's also just going to create calendar hell. And then the amount of time you spend actually supporting founders is de minimis. And so if you like really like company building, if you think you have unique value in the ecosystem, and you just like want to have a better connectivity to like what's going on, you should start your own fund because it's way more interesting work. I'm a little biased because I decided to do that. So I think, maybe you can stick around, do some stuff. But I think, and if you're a founder, like what kind of person do you want to partner with? Do you want to partner with someone who's like sitting there, who's been the same place for 10 years? Or do you want to partner with someone who's like out there, they're hungry, they have very clear voice in the marketplace, very clear defined value in terms of what they will bring
He's like, yeah, that makes sense. Maybe how come I didn't start my own fund?
to you? And you know that like their success lives and dies.
Or maybe he did. Maybe he did. He's just like, it's about time you guys figure that out. I started my fund 5 years ago.
By how much they support you. I think founders also recognize that folks who are building their own things, much like they're building companies, make great partners for them. So I would love it if the question became more of like an obvious answer, like, oh, like why are you like, or instead of why, it's more like, what are you going to do, or why are you doing this, as opposed to like, why would you ever do this?
I had a goal coming.
Whatever, dude. Whatever. I don't think he answered the question. It's like he got triggered. It's like, why are you asking me why did I start my own fund? They don't ask developers why they're leaving Facebook to go work at Google or blah, blah, whatever other companies. Whatever, man.
into the session that within 8 minutes,
Like, why would you ever do this?
I had a goal coming into the session that within 8 minutes I can somehow trigger Rex, and nailed it.
Yeah.
Love it.
I'm easy.
Yeah, see, I was saying I was just thinking that he got triggered. I don't know if I said the word he got triggered, but
easy.
He
They're not
got
gonna
I know.
let you.
I didn't
So-
take the bait.
I think we're all a little bit salty because we all have like a little bit of young kids right now, so the lack of sleep is getting to us a bit.
That's true.
Let's see if I can trigger you both some more though. So, but this next one I think is a less triggering question. And Sarah, you've made the decision when you left Bain to start Sarah Smith Fund to opt for a rolling fund structure with AngelList. Why rolling? It's a relatively new concept still.
Yeah. So fortunately, running the fund of funds at Bain, I had a really unique perspective into hundreds of my.
okay, so I looked up what a rolling fund was earlier. I didn't mention it, but it says here it's a type of venture capital fund that allows investors to commit capital on a subscription basis. Typically quarterly, rather than committing a large sum of money upfront for a multi-year period. Interesting. This model provides flexibility for both fund managers and investors. And here's a breakdown of how rolling funds work. All right, well, I'll let you read that on your own. You could screenshot that. ChatGPT only lets me make the font only so large.
Micromanagers and solo GPs. And I was actually the LP on the other side. Yeah. And for me, it was really important to have a superior LP experience. And I felt that the back office and the backside of what AngelList was doing was like far superior to the other platforms. For the rolling fund specifically, I also wanted to be able to be in business from day one. And the nice thing is you can always be accepting new LPs with a rolling fund. And so literally the day I wanted to start, I was able to start investing in companies and not turn off my deal flow. I also really like the idea of building kind of it's almost like the similar analogy of an ARR business versus like a 2 to 3 year multi-service agreement. We pushed all of our companies to have more predictable revenue. I think a rolling fund does a similar type of thing. I require my LPs to commit to 8 quarters. Mm-hmm. So as a GP, you can set those parameters. So in that way, mine feels a
GP, is that general partner? LP is limited partner, right? Those are the investors. We saw that earlier. What's a GP? General partner are the individuals or entities responsible for managing a venture capital or private equity fund. Okay, yeah, big boss.
A little bit more like a traditional fund, even though it's on the rolling fund structure. I also really want to be able to bring in exceptional individuals as LPs at any time versus waiting 2 or 3 years. So half of my LPs are women. I'm really proud of that fact. And I think a lot of it is because of the flexibility of the rolling fund structure. But I also have this early market bet that I do think AngelList is going to have like dominant market share as back office provider, source of truth of all data. And I just feel
What are back office providers? Telling you all these buzzwords. I'm just starting to like look them up. They mentioned some buzzwords earlier. I was just like, I didn't feel it was important enough to ruin the flow. Back office providers are firms or services that handle the administrative, admin stuff, admin operational and compliance tasks necessary to support the front office activities for business, especially for finance, venture capital, and private equity. Why couldn't you just say admin stuff?
like the product engineering and data teams are far superior at AngelList. And so I wanted to be on the platform that I thought was going to ultimately like win the whole market.
That's
and,
awesome.
and as an LP in 50 funds, in terms of working with platforms, I'm curious like to hear your perspective
I mean,
on.
and I've also been
Yeah, see, so now she mentions AngelList. That's why they're doing the video, because they're on AngelList. So you could look them up and invest in them
a personal LP in funds
Yeah.
too for even a longer
in their funds.
prior. And I mean, to me, it's like night and day. It's not even a comparison in terms of like the technical capabilities of what the AngelList like back office provides compared to some of the other platforms. Now, I think there is a question like institutional LPs, I think are, beginning to embrace AngelList more, but they are used to other tools. And so there's like some education that needs to happen. But I believe that for sure in the next few years, AngelList will be the dominant platform.
Okay. All right, folks. I think I'm going to stop here. So we got a sense of what's going on here. All right. So these people, they created their own funds and they're listed on AngelList. And if you want to dive in to see how their fund works, you could probably go to AngelList here to figure it out. I haven't messed around with this site before. I don't know if you need to like join first before you can search. Interesting layout. I don't really like this red. It's like red's not typically a good color when you're talking about finance. Let's see. They end up chatting about what happened in 2023. What's your poking fun at? I don't know what that means. What's the future of valuation, graduation rates, fund twos, pacing? What happens next? What populations are most approachable? How to raise funds? That sounds interesting. AngelList infrastructure, audience Q&A, pricing, pre-seed and seed investors, one job of early stage managers, who to invest in 2021. How old is this? Talk about 2021, but this was posted 7 months ago. And wrap up. All right. Cool. So go ahead and check this video out if you want to learn a little bit more about venture capitalism. I highly recommend checking out this book here, Angel, by Jason Calacanis. Jason Calacanis. I'm probably butchering his name. But if you want me to do a book review on this when I'm done, let me know. I'll mention it in the comments. But venture capitalism, high risk, high reward type of investment vehicle if you're like the idea of investing into new companies. And using AngelList is one of the ways you could do that if you don't have like millions of dollars to just directly invest in the companies. So that's it, folks. If you want more types of these videos, let me know. This was the first one I did like this. The idea behind this approach was I didn't want to just rush in like a 5-minute video talking about AngelList. I don't want to sound like I was just like promoting them. I'm going through a journey of like learning about angel investing. It's one of like the different ways of investing, and I just want to kind of show you like the process that I go through when I start like watching a video, looking up terminology to understand what the heck they're talking about. And so hopefully you learned a little bit also. And if you got some comments based on like some things I was confused about when I was watching this, if you have like more experience in this space, definitely mention it in the comments, and I would appreciate that. Okay, so that's it for now, folks, and I will see you in the next one.